There's a European stock that could be the next Visa in the coming 10 years, and today I'm going to be going through this one's business, how they make money, and their competitive advantages. This unique business stands alone in how it processes payments and has had a 51% compound annual growth rate in free cash flow over the past 10 years. The Dutch company of Adyen seems set to become a massive player in the global space of payment processing. So I'll be taking a look through their financials and see if this is a company that is as promising as it appears and whether we should be buying it at its current valuation. As always guys, if you like this video or want to see more just like it, then feel free to subscribe for future content each and every week. Adyen's main focus and aim seems to be they want to be the one solution for the global space of payments and want to accomplish this via use of their online platform. They want to meet the rapid growing needs of this fast flowing and online global space through an end-to-end solution platform that simplifies the process of transactions as a whole, operating in the space between merchants and card issuers, offering gateway, risk management and processing and acquiring all through one company and platform instead of three companies and three platforms. Their current clients include Meta, Uber, H&M, eBay and Microsoft. So how have they actually been performing over the past years in this industry? Well, the answer is they've actually done quite well so far. They seem to be focused on growth and growing their platform and attracting customers. But as we can see from their Q1 2024 business update, they're not doing that with the aspect of hurting their financials and lowering their prices power. So they have had an increase in processing volume to 297.8 billion euros this year. So that represents 46% year-over-year growth, which is very impressive. And they cite that basically most of this growth is coming from existing customers, with over 80% of clients choosing to expand on their partnership with Adyen and having only about 1% volume churn for the quarter. So effectively their expansion is already coming from massive clients and merchants like Microsoft, and very few clients are actually leaving Adyen's platform at around 1%. Their net revenue for this year is also up, around 438 million euros, up 21% year over year. So they're still seeing massive aspects of growth throughout their business. And if we take a look a bit closer on the specific breakdowns of their business that they've offered in their business update, we can see that they grew 51% year over year in digital processed volume, with over 90% of their customers using local payments method capabilities that they offer. And then that's followed by 30% year-over-year growth in unified commerce sector, which processes volume, and a massive 55% year-over-year growth in their platform processing volume, which is their main source of revenue from what I understand. So effectively, they're growing very well in all aspects of their business, with their worst performer being 30% year-over-year growth, and their best performer being 55%. So generally speaking, they're growing well as a whole without looking at specific aspects of the business. Additionally, they've also been recruiting methodically in their North American teams, but not recruiting too aggressively. They say they've kept their guidance for the year as unchanged. They want to keep their 5% capex at that limit, and they don't want to go above that 5%, which means that basically they want to keep those costs down and not recruit overly like maybe Google has done in the past. They also are aiming to improve EBITDA margin levels to above 50% in 2026 or so. So they're actually trying to improve their margins as well as recruit and bring people to the platform. So I would say this is a complex company that's trying to make payments more simplistic. And they've actually performed very well over the past 5 years in terms of top line revenue. This graph shows that it's got a bit of a dip in 2024, but generally speaking, I believe that may be a slight problem with the actual graph itself. And their net income has shown impressive growth throughout that time period and has grown even though their revenue has gone down. So I think the revenue has actually remained high. Their cash position is far superior to their debt, which they don't really have much of, and their cash position is increasing at a staggering rate. So we look at that, it's up 46% year over year in the past 5 years to 8.2 billion, which is compared to their long-term debt, which is some 172 million euros. So effectively, they've got no real debt position compared to that cash. And finally, their free cash flow growth looks very impressive. So they've got a 22% CAGR over the past 3 years, showing some signs of weakness in June 2023. Now, the reasons that they actually cited that was because the company were having stiffer competition from North America, from what I understand, with competitors lowering their pricing whilst Adyen's remained the same. So they didn't lower their prices just to get new customers. They've since stated that this move by competitors is actually unsustainable in their market, but to me it actually shows that this is a highly competitive space and a long way from the effective duopoly that we see between MasterCard and Visa. So that being said, they've had awesome sales growth as well. If we take a look at this, we've got over 22% in the trailing 12 months. And with their relative small market cap of 43 billion, they appear to have plenty of opportunity for growth in the future. And with the company expecting net revenue growth in the 20% range up to 2026. Adyen currently trades for €1,241 per share, which is down over 13% for the last year and is up close to 72% in the past 5 years. That's still currently below Morningstar's fair value, which sits at €1,660 per share. So it could present an opportunity at the current share price. Personally, in my portfolio, I already own Visa, so I would consider buying Adyen at current valuations. However, my main concerns are from the competition in growth. And those competitors that come from the private owned company like Stripe and Braintree owned by PayPal, which seem to have significant influence in terms of grabbing market share away from Adyen. So that's a concerning point, and they've already demonstrated that by cutting their prices to lowball Adyen in 2023. They don't have a guaranteed growth path despite their previous achievements, so it might take a while for this one to develop before it's more obvious whether it will grow impressively in this space and grow to be the best that it possibly can be. My knowledge on payment transaction comes from my research into this company and others like it as well. So there's nowhere else that I get that knowledge from. I'm not first-hand knowledge. I don't have first on-hand use of Adyen other than using it when I probably don't even know that I'm using it. So I would still put it on my watch list, and they have a unique business model which I really like. I think it will be successful in the future, so I may end up buying it at a later stage, or should they go on a dip, look at it again. But what do you guys think in this company? Let me know down below. I'll share my thoughts with you if you do want to comment. And as always though, best of luck with your investing and take care, and I'll catch you in the next one.